Okay, so this is a discussion on consolidated financial statements at the date of acquisition. Okay, so let's start. Now, before we start with the basic procedures on consolidated financial statements, okay, we have to understand what happens at the date of acquisition. Okay, for a consolidation, palitan nga natin ito. Ayan, okay. For a consolidation, yan, wherein you have A plus B. If you combine them, okay, they will be dissolved, and there will be a newly created company. Okay. Okay, what happens here is that we close their books at the date of acquisition, and all their assets and liabilities are now transferred in the books of this newly created entity. Okay, and that is Corporation C. Okay, so at the date of acquisition, the financial statements prepared by this entity is already considered as your consolidated financial statements, or it's already the final financial statements. No need to go through the process of consolidation. What about for merger? For example, A, okay, and B, these companies, when they combine, okay, let's assume that B will be dissolved and A will be the surviving company. So what will happen if B will be dissolved? All the assets and liabilities and at fair market value, pati ito at fair market value, will all be transferred in the books of A. So at the date of acquisition, if you're going to prepare financial statements, yung financial statements na ni A ang magiging final, final financial statements. Meron bang ganun? So you don't have to prepare financial statements and while going through the process of consolidation. No need, wala nang elimination entries, ganun. Kasi one existing entity lang yan eh. Now for acquisition, medyo iba yung kwento natin because A plus B is equal to A and B. So assuming A is the acquirer, so A will be the parent and B will be the acquiree. So company B will now be the subsidiary. So they will still continue to operate as a separate legal entity. So they will have their own set of financial statements. They will both have their statement of financial position, statement of financial operation, and your statement of cash flows. But then at the date of acquisition, if they decided to report as one economic entity, then they have to combine their financial statements. Now, the process of combining the financial statements of the parent and the subsidiary is known as the consolidation of financial statements. The focus of our discussion now will be the consolidation of financial statements at the date of acquisition. Okay po? So, ayan. Kaya, we'll just focus on stock acquisition. Kasi yun lang naman, merong parent at subsidiary. Okay, relationship. For mergers and consolidation, madidissolve po yung acquiree. So, in the process of our discussion, we'll be talking about the entries that are necessary in the books of the parent and subsidiary. Actually, dito palang madali na kasi in the books of the subsidiary, there are no entries made most of the time. Okay, during acquisition, it will be found in the entries will be found in the books of the parent. Now, in the process of consolidating the financial statements, there will be elimination entries, and these entries will be made only in your worksheet. Ayan, your consolidation worksheet. Okay po. So, ayan. And then, after preparing the elimination entries, we can now prepare the consolidated financial statements. In the process, we will be talking about the non-controlling interest, how do we value and present that, and of course, there are some common questions that we will attempt to clear out later as we go along. Okay, so let's start, concept of financial statement consolidation. Now, take note, sabi dito, the main objective is to show financial position and results of operation of separate but affiliated companies as if they were single company. Ayan. So, gaya nga ng kanta ng Spice Girls, when two become one. Diba? So, you have the parent and subsidiary. Okay? Two different entities reported as one economic entity. And here, we are going to follow the concept of economic entity. Ayan. Reporting standards require a single set of financial statements be prepared for each economic activity. Okay, but then, you have to consolidate, sabi niya. So, we are required to come up with separate sets, no, for financial statements for parent and subsidiary, and another set, for this combined entity. And the concept is similar to home and branch accounting. In the process of consolidation, we'd like to eliminate reciprocal or intercompany accounts. Okay? And also, in the process of consolidation, we are going to consider the revaluation of your assets, because assets acquired should be stated at their fair market value. And of course, in the process, we will also be recognizing goodwill, or if not goodwill, you have gain on business combination or gain on bargain. Let me write that down. Gain on bargain purchase. Okay po. So, let's continue. Ayan. Let's have the following example now. Medyo maliit nga lang ito. So, please feel free to pause the video, and take a screenshot para makasunod kayo. Okay? So, ayan. Now, here you have two financial statements. Okay? One for the parent and one for the subsidiary. This is now the date of acquisition. Okay? So, what will happen? The parent is going to acquire the subsidiary. It could be 100% or less than 100%. And then after the acquisition, we are going to prepare the elimination entries and show you the working papers, so that you can come up with the consolidated financial statements. And we will have separate, or we will have different illustrations, but most of these illustrations will be based on this given. Ayan, so screenshot na lang. Shout out po pala kay Ma'am Rubina Mendoza, kasi she owns the material that I'm using right now. Okay, so ayun. Now, let's continue. So, we'll have an example. What will be the necessary journal entries if the acquisition is 100%? Yan, acquisition of wholly owned subsidiary. And the acquisition is made at book value. Anong ibig sabihin nun? Acquisition is made at book value. Ibig sabihin nito, the acquisition cost, or the consideration given, is equal to the book value of net assets acquired. So here's an example. Assuming that parent company purchases 100%. So ayan, kaya siya tinawag na wholly owned subsidiary, kasi 100%. Ayan. Of the issued and outstanding ordinary share capital of subsidiary company for 500,000. Okay, so siya yun. Okay, note that the consideration given of 500,000 is equal to the book value of the stock acquired as shown by the following allocation schedule. Now, before I discuss this, balikan natin yung data natin kanina. If you try to look at the books of the subsidiary, this one is your stockholders' equity. And the total is how much? 500,000. Okay po? Okay. Now, the net assets will be 1,050,000 less the total of your liabilities. So, if you try to add 165 plus 385 and then deduct that from 1,050,000, you should also get 500,000. Okay po? So, ayan. Let's continue. So, this is now the problem. Okay, what's the consideration given? Okay, and then what's the book value of net assets acquired? Now, assuming that this is also the fair market value, ilagay nga natin as one of the assumption. It's acquired at book value, and the book value is equal to the fair market values of the net assets acquired. Okay? In some problems, sasabihin, the subsidiary or the acquiree is fairly valued. So if that's the case, all the amounts found in the books of the subsidiary or the acquiree is equal to its fair market value. Okay po. So now, if the consideration given is equal to the book value or fair market value of the net assets acquired, that's also equal to the fair market value, then there is no goodwill or gain on purchase. Okay. What will be the journal entry that will be found in the books of the parent? Okay. One very simple entry that will be a debit to investment in subsidiary and credit cash. Okay. So in the books of the parent, you will now have a new asset which is 500,000 and your cash will be reduced by 500,000. If you go back, your cash and cash equivalents is initially recorded at 650 and there is no investment in subsidiary. Now after the journal entry, okay, we expect that your cash, okay, will now be lower by 500,000. And that is 650,000 initially minus 500,000, no, coming from the acquisition. And there is now a new asset which is 500,000. Ayan. So as you can see, the asset before, which is 2,500,000, and the asset after the acquisition is the same. Okay, doon po sa parent. What about in the books of the subsidiary? There are no journal entries made in the books of the subsidiary. So we have the same amounts, okay, for its assets, liabilities, and capital. Now, okay, let's prepare the consolidated financial statements. First, we're going to prepare your working paper elimination entries. What are our elimination entries? Okay, you have the following. Now, if you try to follow the schedule of allocation of excess, nandun na actually, nakasummarize na yung elimination entries natin. Okay, now, let's try to write that here. You have the acquisition price, diba? Less the book value of net assets acquired. If there is an excess, you now have your allocation, okay, for revaluation, no, less the adjustments for fair market value equals your goodwill or gain on allocation. This is actually the first elimination entry. If your book value is not equal to your fair market values, you will have the same or the second elimination entry. And you have the third elimination entry, and that is to record the goodwill. Sometimes this is already integrated to entry number 1 and entry number 2, as we are going to discuss later. So in this case, since the book value is equal to the fair market value, you don't need to prepare this. No adjustments for fair market value. And since it's acquired at book value, the acquisition price is equal to the fair market value or book value, diba? Ibig sabihin, wala po tayong goodwill. Therefore, this will just be our elimination entry. Our objective is to eliminate the investment in subsidiary company in the books of the parent. Okay, but this entry is found in the working paper lang. So by doing this entry, what will happen, okay, in your consolidated FS, you will not see this account anymore. What about this? These are the stockholders' equity of the subsidiary. You remember that 500 earlier? Siya po ito. Okay, so if you try to post that in our working paper, okay, that's the first entry, no? It was credited. So in your consolidated financial statements, wala na po yan. Well, it's still present in the books of the parent, but in the consolidated financial statements, wala na po siya. Okay? And the stockholders' equity were debited. Okay? Therefore, okay, what will happen is that your consolidated financial statements will just show the stockholders' equity of the parent. And that's it. Okay, what are the common questions in the in this topic, no? consolidated financial statements at the date of acquisition. Sometimes you will be asked, how much is the consolidated total assets or consolidated total liabilities, or what's the consolidated stockholders equity, or what is the goodwill. In this case, wala po tayong goodwill or gain on bargain purchase. Okay po, so those are just the common questions. Sir, what about the consolidated income statement or statement of operation? In this case kasi, at the date of acquisition, there is no operations that took place yet, no, for the combined entity. So, we only combine the results of operation, okay, starting from the date of acquisition. Since there's no operation yet, no, ka-acquire lang kako-combine lang nila your consolidated financial statements will only be composed of your balance sheet or statement of financial position. Kaya, what will be the common questions? Okay, questions that are pertaining to the amounts or the accounts found in your consolidated balance sheet. Okay, if you are asked, how much is the consolidated sales or consolidated expenses at the date of acquisition? Definitely, your answer will be 0. Ayan, wala pa po. Now, although in some books may nakikita ako, okay, they still prepare consolidated income statement, no? But then the results will come from from the operations of the parent. So sir, hindi ba parang alin na susundan namin doon? Okay? Now, if you try to look at these financial statements, meron naman silang proper disclosure. Okay, disclosure. Sasabihin nila na, although this is a consolidated income statement, okay, the results of operation came solely from the operations of the parent. Okay, ngayon, kasi wala pa ngang operation si subsidiary na pwede natin siyang i-combine. Ayun lang po. Okay, so some notes that you have to consider: the elimination entry appears only on the worksheet. No, it's not found in the books of the subsidiary nor in the books of the parent. Okay, and then sabi niya, the consolidated share premiums are those of the parent company only. Subsidiary share premium amounts are always eliminated in the process. Okay? Also, your accumulated profits, ayan, sa parent pa rin yan. Share premium sa parent, accumulated profits or retained earnings sa parent pa rin yan. Okay po. The amounts in the consolidated column of the consolidated statements worksheet, okay, reflects the financial position of a single economic entity, that's subsidiary plus the parent, comprising two legal entities, with all intercompany balances of two entities eliminated. And in this case, you have your investment in subsidiary na na-eliminate natin. Okay po. Now, let's continue. What if it was purchased more than the book value? So, let's assume that instead of paying 500,000, we're now going to pay 550. Now, still, let's assume that the book value is still equal to the fair market value of the subsidiary. So, what's the journal entry made? Debit to the investment in subsidiary account, this time at 550. Kasi sabi nga ng PFRS. Number 3, it will be accounted at cost. No? So, ayun. Cash, the amount that was given up is 550. Okay, so if you try to prepare the schedule of allocation of excess, you have the acquisition price or consideration given, tada, less the book value, which is actually the same as the fair market value. Remember our assumption? So, consideration price less the fair market value, that's now your goodwill. Tatandaan nyo na, yun palagi yung shortcut natin. Acquisition price less fair market value of net assets acquired. Ang daming application nito. Is equal to your goodwill. Oops, sorry. Goodwill kapag positive siya. Okay. Ayan. Kapag negative, that will be your gain on bargain purchase. Parang ganun. Okay, let's continue. Fair market value, you have the consideration given. There is a difference of 50. Now we are going to record this. Okay, so in your elimination entry, we have to eliminate this first, number 1, since there's no adjustment, no, to your values because book value is equal to your fair market value. Okay, we'll have the second. This will be your second elimination entry na. But in this case, we can actually combine. Ayan. So, to eliminate the book values of net assets acquired, and then second, to record your goodwill. Okay. Kung ako yung gumagawa nito, I have one entry for this and I will have a credit of 500. And then I will have another entry for the goodwill. Debit to goodwill at 50,000 and credit investment in subsidiary company at 50,000. Okay. Why do I do that? Because in my explanation, di ba, mas maganda, okay, to eliminate the book values of net assets acquired. Okay, that's for the first part. And then on the second part, to recognize the goodwill arising from business combination. Ayun, in this case kasi, pwede mo namang i-discuss yan, or i-explain ng mas mahaba. Okay? So, ayun. And this will now be your consolidated worksheet. Ayan, these are your elimination entries. First, you credit this, okay, for the book values of net assets acquired. Okay, ayan, and then another credit for ba't nawala na? Ulit. Okay, isang set lang pala ito ng entry. Okay, na-confuse ako. So, first, to recognize your, to recognize your goodwill, you're going to debit goodwill, and then you are also going to debit the stockholders equity para ang maiwan na lang ay stockholders equity ng parent. Okay, and then you will now have a credit to 550,000. So this should be 550 and 550,000. O, di ba? 550 initially debited in the books of the parent. Now in the working paper, you also have to credit that at 550 para maging 0 po ito. Ayan. Okay, so kung tig-isa yung entry mo, pwede naman credit to 500 and debit to 500 for this one. Okay, and then debit to goodwill na 50, eto, and then credit ka na naman ng 50 dito. A total of 550,000 pesos. Okay, so let's continue. Acquisition of wholly owned subsidiary. Some notes for you to remember. The parent company's investment in subsidiary share is fully eliminated. Okay, in our first example, 500,000 lang siya. In our second example, it's 550,000. Shareholders' equity accounts are also fully eliminated. You remember that 500,000 na total. Goodwill in the process was recognized, okay, and was debited. The assets and liabilities are combined with those of the parent. And only the parent's company shareholders' equity accounts are extended in the consolidated column. Dito, if you were asked, common question how much is the total consolidated assets? Okay, don't forget to add, you have the parent's asset, di ba? Kung ano man yung nasa record nila, ayan, we don't adjust the parent's asset. So, you use the book value. Okay, and then, you add the subsidiaries assets. This one is always at fair market value. Okay, now take note, this one has to be adjusted. Don't forget to remove the acquisition cost. Depending on what is given, because like in this example, what was originally given is the parent's asset before the acquisition. So in the consolidated financial statements, okay, the assets should be net of the acquisition price. Okay, so ayan. And don't forget your goodwill. That's now your consolidated total assets. Okay. Now, what if it was purchased at less than the book value? So in this case, the payment is only 400,000. What's the journal entry? At cost, we debit the investment at 400,000 and credit cash at 400,000 pesos. Okay, schedule of allocation of excess. Pinahaba pa computation lang naman yun ng goodwill kung meron. So, you're starting with the acquisition price. Again, here we'd like to assume that the book value is equal to the fair market value of your net assets. Okay, so you have the acquisition price, okay, less the net assets acquired. Okay, sabi niya book value pero it's equal to the fair market value naman. Ako, mas gusto ko yung fair market value na lang sana ang ginamit dito. Ayan. Nanghiram na nga ako ng materials, ako pa yung nanglait. Okay, pero tama pa rin naman yan. Okay, so you now have 500. Now you have a negative 100,000. This is your gain on acquisition. Okay, or gain on bargain purchase. Kung positive, it's goodwill. If it's negative, it's gain on acquisition. Okay po. So, ayun. Now, this will be our guide in our elimination. Okay, you eliminate this, and since there's no adjustment because book value is equal to the fair market value, another elimination entry will be to recognize this gain on acquisition. So, this is how it will look like. Ayan, that's how it will look like. Debit to your stockholders' equity accounts for the subsidiary, a total of 500. Okay, you credit your investment in subsidiary, and this one should be nasobrahan ng indention. Ayan. Accumulated profits dash parent company. Okay, so hindi siya magkatapat. Lagay natin this one will be your debit, and these two items right here will be your credit. A total of 500,000 pesos. Okay, what's this accumulated profits? Yung retained earnings natin. Why is it in accumulated profits? Although the account title is gain, gain on bargain purchase or gain on business combination or simply gain on purchase, which is a nominal account. As of the date of acquisition kasi, wala pa tayong nominal accounts for the combined entity. So, if we're going to prepare your statement of financial position, doon na natin ipapasok sa retained earnings. Okay po? Ayan. Okay. Now, let's go back. There are some notes for us to consider. Okay. If this happens, ano yun? Yung negative goodwill or gain on bargain purchase. Okay. What are we supposed to do? First, you have to reassess the identification and measurement of the acquirees subsidiary. Acquirees identifiable assets. Okay? Baka naman kasi mali lang yung pagkaka-measure mo. Make sure that they are properly valued at fair market value. Ayan. Now, if they are properly valued at their fair market value, you can immediately record the difference as part of your profit and loss. In this case, okay, this is your gain or loss on acquisition. Okay, gain on acquisition. Okay. So, ayun. Sana hindi na pick up dito yung boses ng nagbebenta ng balot. Okay, this is your consolidated financial statements. How will your elimination entry be posted? As usual, your 250, 150, and 100 will be debited. Let's put that there, debit, and this one will be your credit, consolidated financial statements. This one will be the amount for the parent, and this one will be for the subsidiary. Okay, so sir, bakit siya 250? Di ba 650 yan kanina? Kasi nagbayad po tayo ng 400,000. Okay, so 650 minus 400, and 400, pupunta siya dito. You now have 250. Now, let's try to eliminate that. Debit this, ching, 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 and credit your investment. And then, okay, debit the investment and credit gain. Okay. Sir, medyo nalito na po kami. Hindi po yun yung entry kanina. Let's go back. This is the entry when you combine them. But actually, okay, this is composed of two entries. First, you have a debit to ordinary share capital, debit to share premium, and debit to accumulated profits, okay, or retained earnings amounting to 250, okay, 150, and 100,000. And then you will have a credit to investment in subsidiary. Ayan, amounting to how much? 500,000. Oh wait, there's more. This is just the elimination entry, no, to eliminate the book values of net assets acquired. Another entry will be a debit to investment in subsidiary amounting to 100,000. Okay. Oops, sorry. And 100,000, and a credit to accumulated profits or retained earnings amounting to 100,000. Now, this entry is to recognize the gain on acquisition or gain on purchase. Okay po? Now, if you notice, this is standard. What about this? If you're going to record goodwill, debit goodwill and credit investment in subsidiary. But because it's negative, debit investment in subsidiary and credit your accumulated profits. Kung uso pa sana ang negative goodwill, o di credit to negative goodwill, but hindi na siya uso. Luma na po yun. Okay po. Ayan. Let's continue. When the book values and fair values of the acquiree's identifiable assets, liabilities, and contingent liabilities are not equal, in our earlier illustrations, no, book value is equal to the fair market value. This time, they are not equal. It implies that some of the identifiable assets, liabilities, and contingent liabilities of the subsidiary may be overvalued or undervalued. Ayan, gagawa na tayo ng adjustments. Generally, the accounting procedures to be used in recording this kind of business combination in the books of the acquirer could be summarized as follows. Tadan! Determine the consideration given. Standard naman na to eh, di ba? Acquisition price. Record the acquisition of shares by debiting investment in subsidiary. Nothing new. Record the incidental cost associated with the business combination as follows. Na-discuss na rin natin ito previously. Okay, direct and indirect will be automatically recorded as an expenses, as expense pala. Liability issue cost, part of initial measurement of the liability, and equity security issue cost will be debited to share premium. This is already discussed in our previous meetings. What about number 4? During the consolidation process, ito na siya, an allocation schedule to apportion the consideration given to the fair market value of the net identifiable assets of the subsidiary that are overvalued or undervalued. Any unallocated difference will go to your goodwill or gain on acquisition. Paano ba yan? Okay. Now, before we proceed, saan ba ako pwedeng mag-drawing dito? Dito na lang sa gilid. Do you remember the computation of goodwill? This time, we're just going to expand that. You have the consideration given, lagay natin dyan, less the book value of net assets acquired. Take note, this time book value is not equal to fair market value. So, let's stick to book values of net assets acquired. You have the common shares, the additional paid in capital or share premiums. You also have your retained earnings, okay, or accumulated profits. Okay, dadagdag natin yan. There you go. Normally, if book value is equal to your fair market value, what do we get? Ano to? Okay, very good. Kunyari may subagot. Goodwill dapat yan. But if book value and fair market value is not equal, we just call this excess of acquisition price or consideration over book values of net assets acquired. Okay, now from the excess, we're now going to deduct the allocation of excess. We're going to allocate that. Yun ang sinabi ng batas. Where do you allocate that? Okay, you analyze your assets, you allocate that to the excess of fair market, ano ba yan? Okay, fair market value over book values. Ayan, i-deduct mo yan. Okay, for liabilities, it's the opposite naman. The excess of book value over fair market value. Okay. Once you have deducted this, okay, that's the total, you now have your goodwill. Okay, I know you will be confused a little later. Just a little. Let me explain. In some books, instead of deducting this allocation, no, what they do is they add this, pero it's the opposite, excess of book value over fair market value, or excess of fair market value over book values. You get the same results naman. Sa akin, just to be consistent, saan ba pupunta yung consideration given natin? Okay, so let's try to draw that. Dito na lang. If this is your total consideration, a part of that will go to your book values, a part of that will go to your a part of that will go to, bakit ayaw na? Saglit lang ha, saglit lang. And ayun, okay, mukhang nagtampo lang siya ng konti. Ayan. So where am I? You have your consideration. Okay, you have your consideration given. A part of that will be applied to the book values of net assets acquired. Okay, if there's still an excess, okay, the excess will be allocated to the difference of fair market value and book values. Okay, at kung ano yung naiwan, that one will go to your goodwill. So deduct lang ng deduct. Okay, anyway, so this one is now an addition, no, additional information. These are the current fair values of your subsidiary. Ayan. Okay, so yan ang gagamitin natin mamaya. Okay, as you will see, this is different from what is found in the financial statements. So feel free to pause the video, okay, mag-screen capture ka, and then you can continue. Anyway, tada, what's the journal entry made by the parent? Madali lang. Okay, you simply debit the investment, okay, at cost because you paid 550, and credit cash at 550. Okay? Next, ito na yung schedule of allocation of excess. This is the acquisition price. This is now the book value of net assets acquired. Now, book values of net assets acquired. Okay, and after deducting that, you will now have the excess of acquisition cost over the book values of net assets acquired. Ang haba ng pangalan, no? Kaya, okay yung author dito. Kasi ang ginamit lang niya difference. And then, you deduct the allocation. Ayan. So, dito, ang ginawa niya, dinagdag niya. Kung ako, i-deduct ko yan. Pero ito, positive. Okay? So, if you notice, the inventories, let's go back, ha? Ayan. The inventories are 100. Okay? And the fair market value is 150. So, there is an excess of 50. Kung ako, i-deduct ko to 50 dito. Less, yan. Pero sa kanila, i-add na lang nila ng minsanan. Pero it's the opposite. It's the excess. No? Over. Balik. It's the excess of fair value over book value. Okay. Ay, book value over fair value. Ayan. You get the same results. Okay, so eto na ngayon yung adjustment natin. And eto na ngayon yung goodwill natin. Okay, so kung paghihiwa-hiwalayin natin yan, kung ako masusunod, there is one elimination entry, another elimination entry, and this one will be my third elimination entry. Okay, so this is the allocation of difference. Ayan, dito po nanggaling yan. Yung mga adjustments natin dito sa taas. Kung saan nanggaling yung 10,000 dito sa previous slide. Siya po yun. Okay? So, let's continue. Taran! When the fair value of an asset exceeds the book value, the excess reduces the difference between the consideration. Okay? And then, it will be the opposite for your liabilities. Now, the allocation is equal to the difference between the book and fair values of the assets and liabilities. And what is left will go to your goodwill. Check na natin yan. What's the difference of the book values and fair market values of net assets acquired? Net identifiable assets acquired, it's 10,000. Ayan. So, dyan po siya pupunta. Let's go to your elimination entries. Ayan. First elimination entry. Number 1, to eliminate the book values of net assets acquired. Okay, elimination entry number 2, to adjust the net assets acquired into their fair market value, also known as entry for the allocation of excess. In this case, okay, the third entry was already compounded. Ayan, yung 40,000 na goodwill natin. Okay, kung ako yung tatanungin dito, okay, you will have one entry: debit to inventories, debit to land, debit to long-term borrowings, a credit to building, a credit to equipment, and you will have a credit to investment in subsidiary amounting to 10,000 pesos. And then one entry for the goodwill, debit to goodwill of 40, and credit to investment in subsidiary at 40. Okay, so ito parang dalawang entries yan. Kung magiging strict tayo at i-base natin siya sa schedule of allocation of excess. Okay po? So, those are your elimination entries. Ayan. Kung gusto mo ng shortcut, palaging tinatanong sa akin kasi may mga tamad eh. Okay, sir, may shortcut ba sa goodwill? Oh, yes, meron. Okay, yung tinuro ko kanina, you have the acquisition price or consideration given less the fair market value of net assets acquired. Here you have the acquisition price at 550. What's the fair market value of net assets acquired? It's 510. Okay, so let's go back. What's the fair market value? It's 510. So your goodwill is 40,000 pesos. Don't forget to include this if you are being asked to compute for the consolidated total assets. Isa yun sa common questions na nakikita ko. Common errors na nakikita ko. What is the consolidated total assets? Nakakalimutan nilang ilagay ito. Okay, pag minsan nakakalimutan din nilang ibawas ito from the assets of the parent. Okay, so let's continue. So that's the elimination entry. After the elimination entries, if you post that to your working paper, you will have the following working paper. Ayan. So nabawasan na yung cash ni parent. Bakit? Kasi 550. So from 650 less 550, you now have 100,000. Okay. First entry, elimination entry number 1, to eliminate the book values of net assets acquired. And elimination entry number 2 and 3, pinagsama na niya. Okay, that is to adjust the book values of net assets acquired to their fair market values. Okay, like this one. Your inventory is recorded at 100 and it's supposed to be 150. So, dagdag po tayo ng 50. Alam naman na natin yan. Nagkakaintindihan na tayo sa adjustments. Lahat ng kulang, dadagdagan. Lahat ng sobra, babawasan po natin. Okay, so some notes. The elimination entries above are explained further as follows. The first entry, na-discuss ko na to, eliminates the shareholders' equity. And then the difference will go to the difference. The difference of the book value and fair market value. The remaining amount now will go to your goodwill. Okay. Now, let's continue. Acquisition of fully owned subsidiary pa rin. Purchased more than the book value and book value is not equal to fair market value. In this case, okay, sabi niya, 100% of the shareholders' equity is eliminated. Lahat naman kasi yan ina-acquire. Diba? Wholly owned subsidiary. Sir, paano kapag partially owned? mamaya meron po tayong illustration dyan. Pero spoiler, meron kasi tayong tinatawag na full consolidation. So, bawal na po yung partial elimination of stockholders equity. Okay, lahat yung tatanggalin. Yung hindi na-acquire, i-reclass natin siya as part of your minority interest. Now, there are different procedures on how you can present this, no? Lalo na sa mga foreign authors, magsasawa kayo. For our discussion, okay, we're going to treat the we're going to eliminate, no, 100% of the subsidiaries stockholders equity. Okay, whatever is not acquired, we're going to treat that, okay, and present that as your non-controlling interest as a separate item, okay, from that of the parent's interest, but still part of the stockholders equity of the consolidated financial statement. Kunyari, naintindihan yun, babalikan natin yun mamaya. Number 2, the book values of the specific assets and liabilities of subsidiary company are adjusted to the respective fair values. Ayun, laging ina-adjust at fair market value. Kaya nga yung sinabi natin kanina, how much is your consolidated total assets? You have the parents asset, no, the parents asset, syempre at book value yan, at book value, pero don't forget to deduct, baka may adjustment ka, i-deduct the acquisition cost. Okay, eto hindi palagi Okay, you only deduct the acquisition cost if the asset of the parent given to you is the asset before the acquisition. But if these are the assets after the acquisition, you don't have to deduct because it's already deducted. Okay, so yan yung explanation. Parents assets at book value, then plus subsidiaries assets at fair market value. O, di ba? Plus goodwill kung meron kang goodwill. Goodwill is computed in the allocation schedule, recorded through elimination entries, of course, not found in the books of the parent. That's why you have to add it, okay? And the investment account balances is fully eliminated. Ayan. Bakit ganun? Under the economic entity concept, you cannot report an investment to yourself, di ba? Si parent, nag-invest siya sa subsidiary niya. Now, as one entity, si parent and subsidiary, hindi natin pwedeng i-record na may investment siya sa sarili niya. Ayun, so tatanggalin natin yun. What if there is a negative difference? Okay. So, acquisition cost, 450. The journal entry will be 450, investment and credit cash at 450. And then, you have the following. So, this is just a continuation. Okay, so you have 450 acquisition cost. Book values of net assets acquired, still at 500. Naku, negative 50 na. And then, may adjustment ka pa na 10. Ang naiwan na lang ay, wala na ang naiwan, naging negative na eh. So, you now have negative 60. This is now your gain on acquisition. Okay, so your elimination entry now will be to eliminate the book values of net assets acquired. Oops, sorry. This one should be indented here. Ayan. Lagay natin 450,000 pesos. Okay. And then, what is this? 50. This is now your your gain on acquisition. Ayan. Ay, wait lang. Bakit ayaw gumana nitong tumatanda na yata yung pen natin. Ayun. Yes. Mukhang gumana ulit siya. Okay, so let's go back to yellow. Okay, so ito na yung, asan na ba tayo? This is the book value of net assets acquired. So that one will be 500. Tapos ito yung allocation. Tingnan nyo yung explanation niya. To eliminate the investment lang. Actually, lahat naman ng elimination is elimination entry. The objective is to eliminate the investment in subsidiary account. But in the process, you're going to eliminate this, value your assets, and then record the goodwill. And then this one is to revalue, no? To revalue the assets, and then at the same time to record the goodwill, or not goodwill, gain on acquisition. Medyo nakakalito tong approach na to. That's why I prefer debiting ordinary share capital, share premium, and accumulated profits or retained earnings at 250, 150, and 100. Tapos credit to investment in subsidiary at 500. And then the explanation will be, okay, to eliminate the book values of net assets acquired. Oh, malinaw, di ba? Next, okay, let's adjust, no? So we are going to adjust the inventories. Ayan, debit to inventories, land, okay, paano ba long term? Nandito naman inventories, land, long-term borrowings, credit to building and equipment. O, di ba? O, magkano po yun? You have 190 and 180. And then, magkre-credit ka ulit dito ng 10,000. That will be investment in subsidiary. Investment in subsidiary. Okay, so ang explanation naman nito is to allocate the excess to the difference of the fair market value and book value of net assets acquired. So let's try to follow, no? Nag-credit ka dito ng investment in subsidiary na 500, tapos nag-credit ka dito ng sandali, wait lang. Bakit nawawala? Ayaw na naman. Dapat gumana na siya. Ayun, okay. Madami pala tayong patalastas. Ayan, baka pagod na yung mouse. Ulitin nga natin. Credit 500, yan, credit 500 to eliminate the book values of your net assets acquired. And then you will have another credit in the investment in subsidiary of 10. Diba? If you try to look at the T accounts, dito na lang tayo. Huwag naman T accounts. In your parent, no, you have a debit to investment in subsidiary which is 450,000. We're going to eliminate this. In the process of elimination, nag-credit tayo ng 500 and nag-credit din tayo ng 10,000 pesos. Okay. So, it's not yet fully eliminated. Nag-negative siya Dapat mag-zero ito. So, you have one more entry. That is now a debit to your investment in subsidiary which is 60,000 and credit to gain, no? Gain on acquisition. Let me write that down. Amounting to 60,000. But in this case, instead of using the gain on acquisition, we are going to use the accumulated profits because it will go to your retained earnings. Okay po? So, ayun, medyo nakakalito itong part na to. No? Ulitin natin. If we are being strict with your schedule of allocation of excess, the first entry will be entry to eliminate the book values of net assets acquired. Debit ordinary share capital at 250, debit share premium at 150, and debit accumulated profits at 100, and credit investment in subsidiary at 500. Okay, tapos na tayo sa elimination, okay, of book values. Next, to adjust the net assets from book values to fair market values, debit to inventories at 50, debit to land at 100, debit long-term borrowings at 40, credit buildings at 150, credit equipment at 30, and then credit investment in subsidiary at 10,000 pesos. Okay, so what's that? Okay, to record the excess of fair market values and book values. Okay, and then finally, to record the gain on acquisition or goodwill, but in this case it's gain on acquisition, debit investment in subsidiary of 60 and credit gain on acquisition of 60. Okay, so if you look at this, you have 500,000 which is credited. You also have 50,000, no? Oh, 10,000, which is also credited, and debit of 60,000. These are actually the amounts found in your schedule of allocation of excess. First entry, 500,000. Second entry, which is 10,000. In this case, nag-negative siya dito. Pero, yung sinabi ko sa inyo, if you're going to deduct this at papalitan mo lahat, it's so easy to identify because this one will be 50 positive. It means that you have to add that. This one will be positive na 100,000. You have to debit that. This one will be negative, so you credit that, and this one will be positive, so you debit that. So this one will also be positive. So alam mo nakadebit yung investment mo. Ay, nakakredit yung investment mo. Okay po, and this is now the third entry to record the gain on acquisition. And this is the working paper. Okay, feel free to screenshot, zoom in, zoom out. Okay, first entry, this one, to eliminate the book values of net assets acquired. Naku, nagloko na naman. Okay, so you have these, and there's one more. Ayan. Okay, and then to adjust the assets from book values to fair market values, and you will have the following. Okay, now let's continue. What if, okay, the acquisition is not 100%? Now you will have a partially owned subsidiary. This is the time you're going to encounter the terms non-controlling interest, also known as your minority interest. Kaya nga lang, ayaw na nilang gamitin kasi yung term na minority. Meron kasing negative daw na ibig sabihin. And so, instead of using minority interest, let's just use non-controlling interest. Substance over form, they are the same. You have your enkinis and enkinas. What's this? This is your non-controlling interest in the net income of the subsidiary. So, this is pertaining to your net income. Okay. What about this? You have your non-controlling interest in the net assets, okay, of the subsidiary. This one, you will see this in the income statement or in the statement of financial operation. This one in the balance sheet, specifically in the equity section as a separate item in the stockholders equity section. So now you will have two items in the stockholders equity section of the consolidated balance sheet. Okay, you have the equity coming from the parent and the equity coming from the non-controlling interest, which is this one. Okay, let's have some example. The parent acquired 90% of the outstanding ordinary share capital, okay, by paying 500,000 cash. The fair value of the 10%, okay, which is not acquired, is assessed to be 70,000. Journal entry of the parent in its books, you have the following: debit to investment and credit cash at 500,000. Pareho lang, di ba? Gaya ng mga nakaraang transactions natin. And this is the schedule of allocation of excess. Dito medyo malilibang tayo ng konti kasi there are some gray areas. Anyway, to continue, this is the consideration given and the non-controlling interest given at 70,000 pesos. Okay, you add that, ayan, and the total will now be compared with the fair value of the net assets acquired, which is 510. You will have a goodwill of 60,000 pesos. Sir, medyo nakakalito. Okay, bakit? Sir, di ba, if the fair market value is 510, 90% of that was acquired, 10% will be for your non-controlling interest. If you try to compute, what is 10%? It's 51,000. How come this is 70,000? That is a valid question. Anyway, nag-compute na rin lang tayo. What is 90% of 510? Do I have my calculator? 510,000, 1, 2, 3, okay, times 0.9, you will get 459. Okay, so this one will be 459,000 pesos. Yan. Meron kasi tayong tinatawag na full goodwill and partial goodwill, which we will discuss a little later. Okay, also, okay, there are some assumptions that you have to consider, like the fair market value of the non-controlling interest if the fair market value is not given. In this case, it's given. Pero sir, going back to the question, ang labo eh. 10% of 510 should be 51,000. How come the fair market value is 70,000? One example kung bakit nangyayari ito is that let's say that you have the net identifiable assets of the subsidiary, okay, at 510. What does that mean? Pag sinabi natin net identifiable, identifiable assets, ganyan na lang. You have your assets less liabilities at fair market value, and you will get 510,000. What about this 70,000? Let's assume that out of the total issued and outstanding shares, kinuha mo yung 10,000 yan, and it's currently being traded at a certain market value at pinag-multiply mo, you may get this. So, pwedeng magkaiba yung basis nila. This one could be based on outstanding shares, and this one could be based on the fair market value of your net identifiable assets. Balikan yan natin soon. Okay, so, non-controlling interest is measured at fair value 70. Sabi niya, if the fair value of the non-controlling interest is not given, its fair value may be estimated by making an assumption. Naku, eto na yung gross up na tinatawag natin. It may be assumed that if the parent would pay 500,000 for 90%, then it may be implied value that the entire subsidiary, parang partnership lang is worth 555,556. And that is 500 divided by 90. Hinga ng malalim, upo ng maayos. Let's pretend that we're still enjoying this. Okay, what does this mean? If the parent is willing to pay 500,000 for 90%, for the parent, it means that, okay, he views the value of the subsidiary to be 555,556. Okay, this is now the total implied value of the subsidiary. So sabi, if that's the case, then the goodwill would be 45,556. Okay, so you have the parent's acquisition cost plus the fair market value of the subsidiary minus the total fair market value of the subsidiary. Not the fair market value of net assets acquired, but the fair market value of the subsidiary. Yes, you are now confused, but wait, there's more. Non-controlling interest may also be measured on the basis of its proportionate interest in the acquiree's identifiable net assets. And under this option, non-controlling interest will be equal to 51. Ito yung sinabi natin kanina. Tsara, the goodwill then will be 41,000 pesos. That's 500 plus 51 minus 510. Okay, ito yung sinasabi natin na total goodwill. Ito naman yung partial goodwill. Sir, we have a problem. In the CPA board exams, what if the problem is silent? Okay, what do you mean silent? Sir, hindi po niya sinabi whether we're going to use total goodwill approach or the partial goodwill approach, and we are asked to compute for the goodwill. So, what will you do? Okay, syempre, kapain nyo muna. Okay, you compute for this approach, you compute for this approach. If this is present and the answer using the total goodwill is not present, then it might be based on partial goodwill. Or vice versa, you computed for partial goodwill, it's not present. You computed for the total goodwill approach, yes, it's present. Then that might be the answer. The problem is when Okay? When there is, when in your choices, you have, kunyari, letter A based on total goodwill. Tapos sa letter B, meron din yung based sa partial goodwill. Ano yung magiging sagot natin dyan? Now, in the past, I'm not saying that this is a standard, no? But in the past problems, okay, most of the time, I see total goodwill to be the answer of the author, even if there is an answer using partial goodwill. Okay, this is because it will be fair, no? It will be more fairer, my term ba doon? It is just proper, no? That if we're going to value the non-controlling interest at fair market value and there is a goodwill arising from the combination at may share sila, kailangan i-recognize din natin yung share nila sa goodwill. Okay, although some will say dapat partial goodwill. Why? Because of conservatism. Ayan. The non-controlling interest is not acquired, therefore the business combination or the goodwill arising from business combination should only be the goodwill pertaining to the share of the parent. Ayan. Alam ko magulo pa rin. So, let's try to come up with some, let's try to enhance the analysis. Let's try to do this. You have the parent and you have the subsidiary and then you have here your total. Okay? The parent is going to pay, okay, so this is the consideration, no? The parent is going to pay, let's go back, 500,000, okay, for how much? For 90%. Let me write that down. 90%. Subsidiary at 10%. Okay, let's just focus on the fair market value na lang para mabilis, ha? Less the fair market value of net assets acquired. Okay, ito yung net assets acquired. The total fair market value is given to us at 510,000 pesos. Okay, since 90% was acquired, it was computed earlier. That will be 459,000 for the parent. And this one will be 51,000 pesos. Again, gaya ng sinabi natin sa shortcut, consideration minus fair market value equals your goodwill. Let me explain partial goodwill and full goodwill. If we are going to assume that this one is correct, okay, and then we're going to recognize goodwill or in proportion to its fair market value. We value the subsidiary, ang hirap mag-English, We value the subsidiary in proportion to the fair market value of your assets. This means that the fair market value is also 51,000. Therefore, what's the total of this? 551 less 510, you will have 41,000. Difference for this is 0. Wala silang share sa goodwill. What about the parent? 500 minus 459, this will be 41,000. That's the concept of partial goodwill. Okay, the goodwill recorded will only be pertaining to that of the parent. Okay, dito lang siya nag-arise from acquiring 90%, okay, of your net assets. Kasi ito lang naman subject ng business combination eh. Yan yung sinasabi ng mga iba. So, mas conservative na ito yung basis ng goodwill natin. At wala na pong goodwill yung subsidiary kasi equal po yung fair market value nila. Okay, but wait. What if the fair market value is given at 70? So, let's try to recompute, no? You have the parent acquiring 90% and subsidiary at 10% lang yung hindi natin na-acquire and you will get your total just right there. Okay, the consideration paid by the parent is 500,000 and then as of this point, the fair market value of the subsidiary is given at 70,000. So, ang total na ngayon, okay, will be 570. Okay, so that's 570. Ang pangit ng 570 ko. Less the fair market value of your net assets. In this case, it's 510. Let me fix this for you. Para magmukha siyang 570. Ayan. 570. Now you have a goodwill of 60,000 pesos. I-check na natin. Okay. What is 90%? Okay, of 510? It's 459. And the fair market value, this one will be 51. Okay po. So in this case, you now have a goodwill amounting to 41,000. And this one will now be, will now be 19,000. That's the concept of full goodwill. May goodwill si parent na 41,000. Okay, ayan. May goodwill din si subsidiary na 19,000. So, we're going to recognize goodwill of 60,000. But wait, there's more. Okay, meron pang mas nakakalito. Okay, what if the fair market value is not given? So, wala ito. And then we're going to recognize full goodwill. Okay, before we go there, this one is an example of partial goodwill. Kapag partial goodwill, equal yan. Okay, and this one is not known. Why? We can always equate these two sa partial goodwill. Okay, pag full goodwill, magkaiba po yan. Okay, at kapag full goodwill, and this one is not given, eto na yon. You have the parent acquiring 90%, subsidiary, syempre 10% na iwan sa kanya, you now have your total. Okay, given, acquisition cost or consideration given is 500,000 pesos. Okay, fair market value is also given at 510,000 pesos. Okay, so, how do I write that? 510,000 pesos. Since this is full goodwill, dapat meron kang goodwill dito, may goodwill ka rin dyan. This one is very easy. 510 times 90% is already computed at 459,000. So 500 minus 459, this will be 41,000. Gaya rin dati. This one will also be 51,000. But then, since it's full goodwill, we have to compute for this. And it should not be equal to 51. It's higher. So, anong gagamitin natin? Ito ngayon ang gagamitin natin. If the parent is willing to pay 500,000 for 90%, what is now the implied value? Ano yung value niya? 100%. Ito po yung kinompute kanina. Okay? Pero, I will still show you. Ayan, so you have 500,000 para po ito sa 90% divided by 0.9 equals 555.56. Sabihin mo na. Okay, therefore, the subsidiary will have ang difference nila, no? 555.56 minus 51,000, you will now have 4,555 and 56 centavos. You add that together, you will have, dapat yun din yung difference nito, 45,555.56. Tada! Okay, so this is now your full goodwill. Okay, when the fair market value of the subsidiary is not given. Okay po. So, ayun, pag-aralan nyo mabuti. Okay, screenshot, balik-balikan nyo na lang siya. Anyway, let's continue. Okay, this will now be the elimination entry. Elimination entry number 1. Okay, for the book values. Elimination entry number 2. To record the adjustment. Okay, and then don't forget to include the non-controlling interest. Dati 500, di ba? Okay, 500 because it's wholly owned. But this time, it's partially owned. You just record 90% and this one will be 10%. And because there's full consolidation, we're going to revalue the entire financial statements. Okay? Ibig sabihin, all the net identifiable assets of the subsidiary. Okay, 100%. So, ayun. And in the process, we're going to record goodwill of 60,000 pesos. Okay? So, ayun po. Again, this one will be for the parent and this one will be for the subsidiary. Sir, paano po ito? Hindi ba siya parang force balance na naman? Okay, nawala na. Anyway, let me explain. I will just add some extra slides. Ayan, sige, itry nating i-correct ng konti ito. Naalala nyo ba ito? Okay, i-expand natin yan para mas malinaw ngayon yung mga elimination entries natin. Okay, so first you have here your, pili tayo ng magandang kulay para makita nyo. Here you have the parent and you have the subsidiary. Then you have here your total. Okay, let's look at the consideration of the parent. It's 500,000. The subsidiary, okay, has a fair market value of 70,000. So now you have 570. Now kanina, shortcut natin, nileles natin yung fair market value. Gawin natin yung schedule of allocation of excess para mas masaya. Okay? So under the allocation of excess, we deduct the book values of net assets acquired. So for the parent, since this one is 90% and this one is 10%, subsidiary, 90% of what's the book value? 500. Okay, so what's 90% of that? That will be 450,000 and 10% of that will be 50,000. Yan, para mas maintindihan nyo yung elimination entries. Yan ay elimination entry number 1 natin eh. So you now have your excess. Let's just call that excess. Less the adjustments, no? Okay, what are our adjustments? Meron po tayong total adjustment na 10,000. Okay. So you have here the 70,000. You have an adjustment of 10. Saan ulit nang galing tong 10,000 na to? With the book value of 500, okay, the book value of 500 and then you have a fair market value of 510. So may difference siya na 10. Let me write that down. 500, kasi ulit-ulit. Hindi na lang versus. Ayan. You have 510, the fair market value, less 500, which is the book value. Sa shortcut natin, pinagsasama natin to. The excess plus 500. So, you get 510. But this time, ihiwalay natin yung book value and the excess of 10,000. 90% of that will be 9,000. Okay, let me write this down muna. Excess of 50,000 and you have an excess of 20,000. Alright. So, the adjustment of 9,000, that's 90%, and 1,000, well, that's your elimination entry number 2 na, di ba? You will be left with your goodwill. Here you have a goodwill of 41 as previously computed. Here you have 19,000. Tada, and a total goodwill of 60,000 pesos. So, what are our elimination entries? Ito na lang sundan mo. Elimination entry number 1, number 2, and number 3. Okay, so, number 1, you have ordinary share capital. You have your share premium and you have your accumulated profits. Okay, at 100%. Okay, magkano ba yung 100% natin kanina? So, you have 250,000, you have 150, and you have 100. Okay, kung wholly owned sana yan, magre-credit tayo ng investment in subsidiary at 500. Pero hindi eh. 90% lang kasi yung in-acquire natin eh. So you just credit 90% of that, which is now 450,000. Siya po ito. Nasundan? Okay, and this is not a balancing figure. May kwento rin po yan. Siya po ito. Okay, credit to non-controlling interest or minority interest, which is 50,000. So that's your elimination entry number 1. I hope nasundan nyo yun. And then elimination entry number 2. Okay, to record our adjustments. So siya po yun, yung mga adjustments natin na yan. Okay, so you record your inventories, land, and long-term borrowings. Inventories, land, long-term borrowings. Okay, at what amount? 50,140. 50,000. 140. Okay. Ano pa? Nawala na. Okay, you have building and equipment 150 and 30. Building, equipment, okay, 150 and 30. 150,000 and 30. 30,000. Balanse ba o hindi? Ito 190, ito 180. Kulang pa ng 10,000 dito, di ba? Kung wholly owned sana yan, o di credit investment na 10,000. Pero hindi, dalawa na tayo kasi na mag-share sa adjustment na yan. So, credit investment in subsidiary amounting to 9,000 and credit what? Credit your non-controlling interest at 1,000. Ayun. Okay, so ni-record mo na yan. Now, for your goodwill, you record goodwill dahil full goodwill tayo, may share si subsidiary, debit to goodwill at 60,000 pesos. Credit po tayo ng investment in subsidiary, which is 41,000 pesos. Kung partial sana yan, 41 lang to. Pero dahil full, meron ka pang non-controlling interest, which is 19,000 pesos. Tara! Now, let's see. 450 plus 9, okay, plus 41, that will be 500,000. Yung acquisition price. So, na-eliminate ba natin yan? Okay, so, paano po na-eliminate yan? 450, 9,000, and 41,000. What about the 70,000? 50,000 for the book values, 1,000 for the adjustment, and 19,000 for the goodwill. So, how much is the total goodwill in your consolidated FS? Under full goodwill, it's 60,000. Pag partial, it's only 41,000. Okay po. So, ayun. Kung partial, wala na po ito. Yan, wala na po yan. Okay. Ano pa ba yung mga kailangan nating intindihin dito? You try to compare that with the previous approach. Medyo nakakalito, di ba? Parang balancing figure. Saan nang galing tong 50 na to? This is actually your, balik tayo dito ha, this is your 9,000 plus 41,000. 9,000 share in the adjustment plus 41,000, okay, as the share in the goodwill. What about this 20,000? This is actually the adjustment of 1,000 plus the share in the goodwill, which is 19,000 pesos. Okay, so siya po yun. 1 and 19. So, mas malinaw na po, no? Sana. Sayang naman yung pag-discuss natin pag hindi pala malinaw. Okay, so, let's continue. This is the consolidated working paper. Okay, let's pretend that you're interested, okay, to see that. These are your consolidated amounts. Yehey! Di ba? Debit. Yan yung debit mo, yan yung credit mo. Di ko na nakuha para magkasya. This is now your total or consolidated. This one is for the parent and this one is for the subsidiary. Whew. Okay, so let's continue. Let's have another example. Ayan, parent company acquired 90%. Okay, nagbayad po siya ng 450. Okay, so 10% will be the non-controlling interest. The following assumptions would be made to estimate its value if nag-assume siya. Gaya nyo, assuming. If the parent pays 450 for 90 interest, then it may be assumed that the entire subsidiary company is worth 500. Parang magto-total goodwill siya, di ba? Refer to this as the implied value of the subsidiary company. Assuming that this is true, then your controlling interest will be 10% of that, and that will be 50,000. The non-controlling interest, however, can never be less than its share of net identifiable assets, which is 51,000. So, ibig sabihin, magkakaroon din siya ng gain. So, hindi pwede yun, no? Therefore, the non-controlling interest share of the company value is to be increased to 51, replacing the 50. Ano ibig sabihin nito? Balik tayo sa computation natin kanina. Dito, o kaya dito na lang sa isa. Ayan. Assuming that the fair market value is less than 51, kaya sinabi ng batas, you cannot use an amount lower than 51,000 dito. Why? Kasi magkakaroon siya ng negative na goodwill or gain on acquisition. Dapat wala siyang ganun. All gain on acquisition should be absorbed by the parent. So, if that is the case, okay, you are going to equate this to 51,000. Yun lang naman kadali. Ganun lang kadali yung sinasabi ng batas. Ayan. So, let's try to answer that. How are you going to record the acquisition? Acquisition price. Okay, that will be a debit to the investment and credit to your cash. And then, what's now the schedule of allocation of excess? You have 450, 51, the non-controlling interest. So, you have 501. This one should be attributed to the parent only. Okay. So, paano po yung elimination entry? Doon nga muna tayo sa tinatawag natin na allocation of excess. Kunyari, nag-i-enjoy pa tayo. So, you have the parent, subsidiary, and you have here your total. Okay, you have the consideration, which is 450,000. You have here the fair market value. I-shortcut na natin ha. Okay, the total fair market value is 510. Okay, and 10% of that is 51,000. This one will be 450. 459. Tama po ba? 400. Oops, bakit nawala na? Feeling ko 459 ito kanina eh. 59. Okay, so nag-assume daw siya 450 divided by 90%. So this one will be 500. And 10% of that will be 50,000. Pwede ba to na magkaroon siya ng negative? Okay, na 1,000? Hindi pwede. Kaya, dapat ang lowest lang na value nito will be the fair market value. The share in the fair market value of the net assets, which is 51,000. Let's try to eliminate that. So, 0 na to. Okay? And then, this one will be negative 9,000. Okay. Kaya, sir, paano yan? Hindi negative 10,000. Hindi. Negative 9,000 pa rin yan. Okay, kasi hindi na natin gagamitin ito. Magiging 51 na po siya. So, this one will be 500 and 1,000. Yun yung sinasabi niyan. Or para mas madali ang buhay natin, sige, gawin mo yung 50,000. You will have negative 1,000. But then, bawal yan. So, tanggalin mo lang yan. O, tapos yung kwento. Hindi mo i-recognize yan. Eto lang, 9,000 na to yung i-recognize mo. Okay, so this is now your elimination entry. Nagkakaintindihan na tayo dito. This one is 90% and 10% of the book values of net assets acquired. Okay, this one will be the adjustment. Okay, yung 1,000 yen, it was computed earlier. And this one will be for the gain on the acquisition. Okay po, this one will be pertaining to the revaluation. Okay, that's the consolidated working paper. Okay, so let's continue. Comparison between partial and full goodwill, na-discuss na natin ito kanina. Pero sige, i-discuss ulit natin para mas maintindihan nyo pa. Fair value of non-controlling interest in the subsidiary is not given. So, 80% was acquired for 10 million. Carrying value is 6, but the fair market value is 8,000. Okay, what are the common questions? How much is your goodwill and what is the non-controlling interest? Okay, so if we are going to use partial goodwill, di ba? So equal lang yung fair market value dapat ng non-controlling interest. Di ba? Ito yung para sa parent. Tama po? Okay, and ito yung mga adjustments natin. Ito naman, yung non-controlling interest natin. So, let's try to recompute this nga. Kasi maraming nalilito dito. Yan, so, you have your 1,600 and goodwill of 3,600. Okay. Let's have a different computation for that. Ayan. You have the parent and subsidiary. Partial goodwill lang po tayo, ha. And you have here your total. Okay. So, under partial goodwill, you have here your acquisition cost or consideration received, which is 10,000 pesos. Oh, no, 10 million pesos. You have here the fair market value given, no? The fair market value given at 8 million pesos. Partial goodwill, di ba? Ito lang yun. So, if that one is 80%, 80%, this one will be 20%. What is 20% of 8 million? That's 1,600,000. And what is 80%? This one will be 6,400,000. Okay? Goodwill, under partial goodwill will be the difference of these three, and that is 3,600,000. And because it's partial goodwill, this should be the fair market value of your NCI. Diba? NCI yan pala, NCI. Subsidiary ako ng subsidiary kanina. Okay, so your NCI now, will be 1,600. Ayan, so you get 11,600. Okay, minus 8 million, you will have 3,600,000. No goodwill for the subsidiary. So, how much is the goodwill under partial goodwill? 3,600. What's your NCI under partial goodwill? 1,600. Let's compute paano kapag we compute for the implied value. Okay, so let's compute for the total goodwill approach. You have here the parent, subsidiary. Kunyari nag-e-enjoy pa tayo, we are almost done with the 50% of the discussion. Yes. Given. Ito. Sana ganun lang mag-discuss, no? 20 and 80. This one will be 6,400. This one will be 1,600. Total goodwill. So this one should be higher. So if this is 80%, the parent is willing to pay 10 million for 80%. So for the parent, the implied value will be 10 million divided by 80%. So what is 10 divided by 80%? I think it's 12,500,000. Tinatamad na ako maglabas ng calculator. This one will be 2,500,000. Sana wag ako mapahiya. So this one is 4.5. Okay, so that will be your goodwill. Okay, your goodwill should still be the same. 3.6. And for the NCI, baka subsidiary ng subsidiary, NCI 1.5 minus 1.6, that will be 900. That's the share of the NCI, no, in the total goodwill of 4.5. Let's try to go back nga. Okay, so that's your partial goodwill. This is the NCI under partial goodwill. Under full goodwill, that's your full goodwill. Tada! And tada! NCI at 2.5. O, di ba? Mas madaling intindihin kapag nagganito ka na lang. Ayan, if you want to complicate things, okay, you divide this fair market value into two elements. No, you have the book values and you have the adjustment, the difference of fair market value and book values. That way, no, you'll be able to identify the values used in your elimination entries. Okay, so let's continue. Another comparison. Kala ko tapos na. Entity subsidiary has 40% of its share publicly traded on an exchange. Entity parent acquires 60%, okay, non-publicly traded shares in one transaction, paying 6.3, so that's the acquisition cost. And based on the trading price of the shares of entity subsidiary at the date of gaining control, a value of 4 million is assigned to the non-controlling interest. 6.3 and 4 million. Indicating that the entity subsidiary has paid a control premium of 300,000. The fair value of entity subsidiary identifiable net assets is 7 and the carrying value is 5 million. Okay, ano ba to? Pag partial goodwill, there you go. Sir, saan po nanggaling yung 6.3? Balikan natin. Ayan, that is now given. Okay po. Sir, saan po nanggaling yung 3 million? That's 60% of 5. Okay, now you have the adjustment. Okay, goodwill partial is 2.1 and your NCI is 2.8. I-try nga natin. Parent NCI. Tama na ako. Pahiya talaga. Hindi po ako mag-i-edit ng video dahil ayan. Okay, parent, NCI, and you have here your total. Okay, so for the consideration given, it's 6.3. 6.3. Pagtabihin natin para makita nyo kung saan pupunta yung mga elements. Okay, and then you have the subsidiary. Okay, hindi pa natin ilalagay dyan. Tapos, you have here the book values of net assets acquired. You have here your excess. Ayan. Adjustment. And you now have your goodwill. So, yeah, let's try to answer this nga. Yan. Di ko pa to na-solve. Sana hindi po ako mapahiya. Pag partial goodwill, dapat ito ay equal dito. Tas ito dapat ay 0. Okay. Naku, wala. Ito na. Ang book value daw po niya ay, asan yung book value? Carrying amount is 5 million. So, ito po ay 5 million. And ang fair market value niya ay 7 million. So, ang adjustment natin ay 2 million. Pwede namang i-shortcut. Sana 7 million na lang natin itong dalawang to kasi yun lang naman ang tinatanong, di ba? So, under partial goodwill, 60%, this one will be 3 million. So, 40% will be 2 million. Nakaka-nervyos. Adjustment, 60% of 2 million, that will be 1,200,000. And 40% will be 800. Ayun, so dapat ito ay 0. Dahil partial, dito natin i-base yung NCI natin. 5 million, ayan, 5 million times, hindi, fair market value pala dapat. Etong dalawang ito. 7 million, yun. 7 million times 40%, kano po yung 40% nito? 2,800,000. Nininervyos na ako. Yes. Bawas pogi points kasi patapos na tayo tas magkakamali pa ako, di ba? And this one will be 0. Okay. Ito naman. 6,3 minus 3 will have 3,300,000. 3 million, 3 minus 1, 2, 2,100,000. That's your goodwill. Magkano to? Ayun! Tada! And this one, a total of 8. No, this is a total of 9. 9 million na to. 9,100,000. Minus 5 for the book values of net assets acquired. That's 4,100,000. Minus 2 million, you have 2,100,000. Tingnan nga natin kung tama yung ginawa natin. Goodwill, under partial goodwill, it's 2,100,000. Okay? And your NCI should be 2,800,000. Ayun, 2,800,000. Okay, so that's under partial goodwill. Paano naman kapag full goodwill? So, ayan, nag-gross up na siya. Okay, so under full goodwill, you will have 3,300,000. Ganun lang yung gawin nyo. Okay, and then the book value, tama. Your NCI naman, share of non-controlling interest in goodwill is 1,200,000. Dagdag tayo ng isa pang slide. Paano ba yun? Okay, ayan. Sige, gawin nga natin. Sana hindi ako mapahiya. Okay, again, you have here your parent. Okay, and you have here your NCI. NCI, you have here your total. Full goodwill tayo, ano? So you have the acquisition price ng parent kanina, it's 6,300,000. Tapos dahil full goodwill, i-consider natin yung tamang fair market value nito, which is given at 4 million pesos. A total of 10,300,000. Okay, next. Long cut tayo. Less book value. Ayan. Your total book value is 5 million and the book value of net assets acquired by the parent, which is 60%, you now have 3 million. 40% of this will be 2 million. Nakita nyo yung difference? Kanina dito, it's 2,800,000. No, kasi yung fair market value ng net assets times 40%. So, that's 7 million, no? Times 40%. Kaya naging 2,800. This time, given na yung 4 million. Yun lang naman yung difference dito. Kaya nagbago yan. Ngayon, tuloy-tuloy na tayo. Okay, so you have here your excess. Your excess will be 3,300,000. Tas ito ngayon ay 4 minus 2 lang, naghang pa yung utak ko. Ayan. So you now have 2 million. Ito ngayon ay 5,300,000 for the total. Okay, so for the allocation of 2 million, saan ulit nanggaling tong 2 million na to? That's the fair market value of 7 million less 5 million na book value. Okay, so less the allocations of your assets for the part that is acquired. So you multiply that by 60%, you get 1,200,000 and 20% of that will be, wait lang boy, 20, 40, 60. Let me write that down. Nalilito ako. 60 and 40%. Kunyari, nag-enjoy pa ako. 40% of 2 million is now 800,000. Ayan. So, now you have here your goodwill. Okay, 33 minus 1, 2, that's 2,100,000. Ito yung partial goodwill natin kanina, di ba? Ayan. Pero dahil full goodwill, meron na rin share C and CI, which is 1,200,000 for a total of 3,300,000. 3,300,000. And this should also be the difference of these 253 minus 2. Yes, okay. So, tama siya. I-check natin na how much is your NCI under full goodwill? It's 4 million. And what is your goodwill? Full goodwill approach is 3,300,000 pesos. Let's try to check our answer. To be honest, kaya ko po ito ginagawa kasi nalilito ako sa ganitong approach. Kaya hindi ko makita yung logic, kumbaga. Hindi gaya nito, nahahati ko yung parent, yung in-acquire niya na part, at saka yung hindi niya in-acquire, which will go to your NCI. Kaya kitang-kita mo yung share nila sa book values, sa adjustment, tsaka yung share nila sa goodwill. Bakit? Kasi pag minsan, we have questions like, how much of the goodwill is directly attributable to the non-controlling interest? So you have this. Or goodwill attributable to the parent, it's 2,1. Or total goodwill, that's 3,3. Now, if we're using partial goodwill, how much will be attributable to the non-controlling interest? Well, under partial goodwill, the answer will be 0 because only the parent's goodwill will be recognized. Okay, so, yung mga ganong approach. Okay, so, next slide. Uy, wala na. Okay, so, I guess that's it. Don't hesitate to ask questions. Okay, so I will see you soon. Thank you.